Here is something nobody tells you when you are celebrating that promotion. Every dollar increase in your salary makes you poorer. In 2025, the average American earning $75,000 pays 42% of their income to taxes, healthcare, and mandatory deductions before they even see their paycheck. Meanwhile, billionaires pay an effective tax rate of 8%. Your salary is not a ladder to wealth. It is a treadmill designed to keep you running in place while the system extracts maximum value from your labor. Let me show you exactly how this trap works and why you have been lied to your entire career. Think about your last raise. Maybe you got a 5% bump. You felt good for about a week. Then reality hit. Your health insurance premium went up, your tax bracket shifted. Suddenly, that extra $300 a month became $140 after deductions. But here is the part that really stings. That raise pushed you just over the income limit for certain tax credits. You lost your child care subsidy. Your student loan payment recalculated based on your new income. By the time all the systems adjusted to your higher salary, you were actually taking home less money than before the raise. This is not a bug. This is the design. The income trap operates on a simple principle. Salary income is the most heavily taxed, most visible, and least flexible form of wealth generation in America. According to 2025 IRS data, wage earners pay the highest effective tax rates of any income group. If you make between $50,000 and $200,000 as a W-2 employee, you are in the extraction zone. You make enough to be taxed aggressively, but not enough to access the wealth-building tools that the top 1% use every single day. Let me break down the math they do not teach you in school. Say you earn $100,000. Sounds solid, right? Subtract 22% federal tax. Subtract 7.65% FICA. Subtract your state tax, let's say 6%. Subtract health insurance, $400 a month. You are now at $61,000. Subtract rent or mortgage, transportation, food, utilities. You are living on maybe $25,000 in discretionary income. Now try to save for retirement, build an emergency fund, and invest for your kids' college. Impossible. But here is where it gets darker. The wealthy do not play this game. They do not take salaries. Jeff Bezos has a base salary of $81,000. Elon Musk takes zero salary from Tesla. They generate wealth through equity, stock options, real estate holdings, and business structures that allow them to borrow against assets instead of selling them. This means they pay almost nothing in income tax while their wealth compounds at 15 to 20% annually. You are paying 42% on your $75,000. They are paying zero on their $15 million in asset appreciation. The system is not broken. It is functioning exactly as designed. Now ask yourself this. Why does every financial advisor, every HR department, every career counselor tell you to climb the salary ladder? Because the higher your salary, the more tax revenue you generate, the more you spend on consumption, and the more trapped you become in the cycle. A high salary creates golden handcuffs. You cannot leave your job because you need the health insurance. You cannot take risks because you have a mortgage sized to your income. You cannot build real wealth because every extra dollar gets taxed at your marginal rate. Here is the truth they do not want you to hear. Salary is designed for stability, not wealth. It is a tool to keep you productive and compliant. Real wealth comes from ownership, equity in businesses, real estate that appreciates and generates passive income, intellectual property, assets that grow in value without triggering ordinary income tax. The tax code is 8,000 pages long, and most of it exists to reward asset owners and punish wage earners. In 2025, you can deduct mortgage interest, business expenses, depreciation on rental properties, and dozens of other things if you own assets. But if you just work a job, you get a standard deduction and maybe some retirement account contributions. That is it. So what do you do? First, understand that a salary alone will never make you wealthy. It is a starting point, not the destination. Second, start shifting your income sources. Build a side business. Even a small one changes your tax situation completely. Third, learn the language of assets. Buy cash-flowing real estate. Invest in index funds that pay qualified dividends, taxed at 15% instead of your 32% marginal rate. Fourth, stop celebrating raises and start negotiating equity. If you work for any company with growth potential, stock options are worth more than salary bumps. Fifth, use every tax-advantaged account available. Max your 401k, open a Roth IRA. If you are self-employed, set up a solo 401k or SEP IRA. These are the only tools the system gives you to level the playing field. The income trap is real, and it is crushing the middle class. But now you see it. You cannot unsee it. The question is, what are you going to do with this information? If this opened your eyes, smash that subscribe button. We drop new videos every week that the financial system does not want you to see. Drop a comment below telling me what you think. See you in the next one.